Question everything, trust nothing, except for your boy CryptoKeeper. Hopefully everybody is doing well. Welcome to CryptoWarz. We've got a special show today I am excited about. I'll tell you, I don't do much sponsorship stuff, guys. So I want to be clear with the only way that I do anything that is anything surrounding the sponsorship, realm. It's if I believe in something. And I had this thing, and we'll get into this a little bit more, where I have all this Ethereum. A lot of you know I'm a big Ethereum bull. I've got all this ETH, and this ETH is just sitting there, and it's doing nothing for me. And I'm like, damn, I need to figure out something good to do with this Ethereum than just, better than just letting it sit there. So that's what we're going to talk about today. I'm sure a bunch of people in the chat probably have the same thing. They're like, well, I'll give an example. Like, I could run a node, but I'm not totally familiar with that. But if you can't run a node and you've got some Ethereum, but you still want to have access to it, I've got answers, right? We've got questions and answers today. So, hey, chat, make sure to ask all of the hard questions. Got a couple gentlemen backstage I'm going to say hi to and bring them up in 1 second. Let me jump into the chat first. Caffeinated Crypto, first in the house. Bring in the coffee. Let's get it. Good to see you, Enrique Suave. Glad that you are here. I got some new names in the chat as well. Arian, glad that you are here, if I said that right. French Toaster in the house. Glad to see you as well. What do we got? We got, what is this? Leather AIZ. Are you wearing leather today? I don't know. Johnson, we've got Nick Nelson. We've got Crypto Independent says, what's up? Yeah. Excited about it. Let's get into it. All right. So first of all, smash that like if you haven't already. Make sure you follow Crypto Zombie. If you are not following him already, what are you doing with your life, right? And then check out the link down below the stream as we get into the sponsored segment today, which is with Vinity. Let's bring him up. So first of all, Zombie, what up, brother? Art, you're muted. You're muted. And I know what you're thinking. I know what you're thinking. You're thinking, where'd my green screen go?
Yeah, I was wondering. I had a, now you guys are looking at this ugly green right here.
I don't know what you did the first time, but maybe try it again.
I don't know. Maybe I'll fix it on stream. But so thanks for having me on, man. And I just want to can I just make a quick statement?
Yeah, for sure.
I am not sponsored by Vinity. Yeah. I am here because I'm pretty good friends with Keeper. We talk a lot about this, and I know he's super big into ETH, holds a lot of ETH, probably has more ETH than I do in all transparency. And I mean, you wouldn't stop talking about this thing. You're like, you got to look into it. I'm skeptical, right? Because there's been a lot of crazy stuff. We had BlockFi, Celsius, all this madness. So rather than, kind of ask for you, I was like, can I just come on the show, talk to the team? Maybe some of my guys want to come over, ask some questions in the chat. Let's see what this is about, because you're really big on this, and I trust you, man. You've steered me in some good directions in the past. Yeah. So I wanted to take the opportunity to come on here and literally, like the title says, ask some questions. So
yeah, I'm excited. I'm excited about it, dude, because ultimately I know you've done really well in the crypto space, and I want to see my friends succeed too. So all of you in the chat, the whole idea here is find a new way to succeed in the world of crypto. So let's bring him up. We have got Sergio from Vinity, the creator of Vinity. Sergio, good to see you, brother.
Happy to see you guys. Thank you very much for having me on.
Dude, I'm excited. I am really excited to show people this. We've talked about this before. For those of you maybe maybe saw me, I was actually at Sergio's in Colombia in person. So like I said, I'm really particular about what I will and won't do. I've met Sergio, spent time with him in person. I'm just really bullish on what is going on in this ecosystem. So I want to dive into it. But before we do, we got some fun stuff happening in the crypto space. Let me just start off, because I always do it this way. Let me start off with just showing the markets, because people are here. They're excited about what's happening in crypto. Am I making money? Well, let's talk about it right quick. The global market cap's at 2.561 trillion with the T dollars. That's up 3.1%. Bitcoin just under 67K. Let me zoom in a little bit. Just under 67K. ETH, which we'll be talking about a lot today, $3,097. Let's keep it above 3K. Rolling down through the top 10. Something else I'm super bullish on. Toncoin at $6.67. Guys, the markets are looking bullish, and I want to know what that bullish structure looks like, as it were, with what we're talking about today, which is Vinity. So, Sergio, I'm a kindergartner. Zombie's a kindergartner. I have a fundamental understanding at this point of what this is, right? Mm-hmm. So I want to direct this more towards Zombie's way so that he can ask the hard questions. If you were going to explain to the kindergartner that is Crypto Zombie, what is Vinity and how does this whole thing work?
Perfect. Let's dive right into it. So I'm going to share my screen. Before we get into what Vinity is, I want to explain what we're trying to solve with Vinity. Okay. So there are three main problems that we find in crypto that we're trying to solve. One is rug pulls and pump and dumps, which are basically scams that have been haunting cryptocurrencies since inception and slowed down the progress of this great technology. We're trying to solve that. Second is long staking periods that users have to lock their ETH or whatever asset for a long time and get a low APY in return. And the third one is no access to liquidity to holders that, for example, you hold ETH, Bitcoin, whatever you have, you can't have access to it unless you sell it, or you can take a collateralized loan, but then you suffer if there's huge volatility in the market and, well, you can get liquidated, right?
Right.
Those are the three main issues that we're trying to solve, okay? How does validity work? The validity token can only be minted using Ethereum, right? So there's no token allocation and there's no unlocking period. Up to this point, we have generated 1,221 Ethereums that are backing 12,200,000 coins. These hasn't generated backup, but right now we're at 1,221 Ethereums backing 12,200,000 coins. That gives each validity being backed by 0.001 ETH. All right. So the great thing about this is that you can access that Ethereum without having to sell validity. The way that you do that is that you reverse stake it. So you give the validity, you lock into a smart contract, and it gives you the Ethereum we have generated for each token from the smart contract itself. That's the small basis of what validity is. Do you have any questions, Zombie?
Oh yeah, I have a lot. Yeah, so yeah, I mean, I get it. So you guys, so this isn't available? Like, for example, I'm a little confused about the token price. So it can only be created, but it could also be destroyed, I guess, if you pull the ETH out. So is this token, is this going to be like listed on exchanges to be traded and stuff like that?
Yes.
So how does that work with the price? What I'm trying to understand is how, I understand there's nothing that's guaranteed, but how are we going to be able to guarantee that the price will continue to climb? I guess as more people are staking their ETH for validity, at some point you're going to feel tempted to sell that.
Yes.
You know, so how is there a guarantee that this is a hedge that would be better than just simply staking Ethereum itself?
Okay, perfect question. So the whole project, the whole basis of the project is to consistently generate more Ethereum per V, so that each V is generating more Ethereum. It does that through three ways. One is through minting no tokens, right? So right now, the market right now is around 61 cents, but you can mint validity at around 60 cents. So new users coming in rather mint, adding more Ethereum into the ecosystem than coin in circulation, and that will just generate more Ethereum per token. That's the main reason that it keeps generating Ethereum. The second is every time that users buy and sell on the exchange. So for example, I'll pull this up here. You'll see that it has this 2% fee when you buy and sell. That 2% fee goes into the ecosystem, taking the coins out of circulation. So those coins that are being backed by Ethereum, those coins go out of circulation, but it leaves the Ethereum in the protocol for the remaining V. So each Ethereum generates, each V is generating more Ethereum every time people buy and sell. And also when holders stake or claim that Ethereum and stake the validity, there's a small burn that's 1% that also takes validity out of circulation. So the whole ecosystem is just consistently generating more ETH per token through minting, transaction fees, and burning from staking. Was I able to answer your question?
So the percentage, the 2%, you have a burn fee, which takes them totally out of circulation completely. Yes. And then what is the other one? Kind of just like recycled, I guess, like back into the pool?
It's the same thing. So here, it just gives a quick 12 reasons why validity is different. I encourage users to come read this, but I want to go down here to where we explain the tokenomics. So the whole tokenomics are based on 3 smart contracts. The first one is called the revenue cycle treasury. This is the only smart contract that can create validity. There's no other way to create validity. I can't press a button. There's no token allocations. There's no unlocking periods. Only when users come here and they mint, it generates validity. They mint it using Ethereum. 100% of that Ethereum goes into the yield rate treasury, And users can claim that Ethereum by staking their validity in the reverse staking treasury. And it has that 1% burn that sends it back to the revenue cycle treasury to be reminted along with the transaction fees. So when you see it, it's just a recycle that's consistently generating more Ethereum per token through minting, sending Ethereum into our locked smart contract. Users can claim that Ethereum by staking validity. And when they do that, they have a 1% burn that sends validity back to the revenue cycle treasury to be reminted along with the 2% transaction fees outside the ecosystem. So when users go buy it on Uniswap, when we open up other liquidity pools and other DEXs or exchanges, all that is going to benefit the ecosystem. So the theory about validity is what we really believe that DeFi is truly meant to be, that everyone benefits equally from the minting, transaction fees, from the burning. Everything is just generating more ETH for our holders.
Right. Okay. So, all right. Yeah. I mean, that makes sense. So this is, I guess you call it, because you're minting it, it's like a fair launch. There were nobody got an ICO investment allocation. There's no big VC sitting on a bunch of bags or nothing like that. This is purely, right.
Yes. Sorry to cut you off. But the biggest bag is mine personally, because I created the ecosystem, so I had first access to the ecosystem. But I minted all my tokens, right? All the tokens that I have given Ethereum for them, and I have minted them myself. And
you just got them super cheap on the front end, obviously, because you were the first access to it.
Exactly, I had the first access to it. But there's no token allocation here. Everyone else, from everything that is developers or VCs or all this, had just, if they wanted some V, they would just mint it themselves or buy it in the market.
Right, because the question would be then, like, how is it not like a Ponzi structure where it's like, well, I got in first, I got the most, and then it almost seems like it is in a way trying to encourage you, though, to get in sooner than later. It kind of still has that theory to it, but getting back again, and the part that I'm still a little
but that's within every single project, right? So if you got into Bitcoin earlier, you're benefiting more than if you got in later, right? That's into every single project. The difference here is that even if you get in later, your token's still going to benefit from the transaction fees, from the staking, and from the minting at the same ratio mine is, right? Of course, I've got mine, and I buy consistently more. Like just yesterday, I bought more. Because the great thing about this is don't forget, you can access liquidity, right? So if you buy around 60 cents, you can access right away liquidity, get Ethereum out, but 100% of the coins are still yours, generating from the transactions and reverse staking and newly minted coins.
So like Zombie, when I look at my wallet right now, I started to tell you this before the show, but one of the cool things that I loved, and Sergio showed me this, because you can do it more than once, right? Ultimately, I think I've put in maybe $1,100-ish worth of Ethereum towards it. I've reverse staked a couple times. Guess what? I've got $2,500 worth of Ethereum sitting there, and I think I've got somewhere around $600 worth of ETH that I had that I still have full on access to, that I can use, and the validity continues to grow because it's backed by ETH as ETH grows. So I'm like, bam, I got access to a bunch of ETH. I got the validity that continues to grow with ETH growing at the same time. It's a win-win. I didn't have to actually sell. And then Sergio, let me have you answer this question. So then what happens when I'm like, hey, market's in a really good spot, I need to take profits? What's that look like?
So it's really up to you. So let's say validity is the highest point right now at 60 cents, right? For you to unstake, you just give back the Ethereum or the X collateral you took out, and the validity is unlocked, sent back to your wallet, and you just sell it in the market, right? But the great thing about this is that right away, when you get validity, as soon as you have it in your wallet, either you minted it or you bought it in the open market, you have access to liquidity right away. Right? So you get access instantly, right? To either buy more or just have, and it can keep generating more liquidity for you that you can access. So at the end of the day, that's why such a big percentage of our tokens are being staked. We have around like 95% of our tokens being staked. and users, the general idea is, why would I sell something that already generated liquidity for me? I already accessed that liquidity and is consistently generating more liquidity, and the token itself is going up against Ethereum.
Yeah, that's literally what I love about it.
But again, you do understand where I'm coming from, where I'm asking the question, like, I know there's no guarantee. No one can I can't even guarantee Bitcoin's going to go up today or tomorrow. You know what I mean? No one can guarantee that. But it almost like has that seems too good to be true, everybody wins kind of vibe to it. Like what I'm trying to say is the price appreciation by minting the validity, right? And you're staking your ETH. What is creating that price appreciation of the tokens? Like you said, you got to do it early, so the token was cheaper. Is this speculation pushing the price up, or is there some mechanism within the contracts that increase the value? Is there like an algorithm to it, or how does that work?
The whole, I'm going to share a screen again. So we go back to my screen.
Yep.
If we go back here, right, this is going to give you the breakdown of what the tokenomics or the algorithm does, right? I'm going to draw your attention to the bottom gold line. This represents the amount of Ethereum that's back in each coin, right? Or each coin has generated up to that point. So right now you can see it's 0.0001, right? The amount of Ethereum needed to mint newly tokens is represented by the top gold line, right? The reason that it's always 2 times the price of what the amount of Ethereum that is generated by each coin is that when new users mint, it adds double the amount of Ethereum into the ecosystem than coin in circulation. So that automatically generates more Ethereum per token. And every single transaction, from buying and selling and staking or sending to each other's wallet, every single time users interact with the ecosystem, it burns validity, leaving more Ethereum for the remaining. So this amount of Ethereum, just from those 3 mechanisms we spoke about, goes up. And when this goes up, the amount of Ethereum needed to mint goes up as well. And the market just buys and sells between those 2 price points. But it's always on the upside against Ethereum. Remember, this is Ethereum. If Ethereum dumps, we dump as well. And if Ethereum pumps, we pump as well. But
that's what I was going to say, because if you're basing it on price, not amount. Because I mean, 1 ETH could be worth $30, years ago versus $5,000 a year from now. So that the price is really more of what you're tracking rather than the ETH itself.
Exactly. And if you see here, January, February, March, we had around 11% APY. That's because we didn't even launch our liquidity pool yet. And that APY was given just for users that already had validity, right? That minted on a platform, went and staked it, and that had that 1% burn a month. That's why it generated that 12%. Because when users stake, it has that 1% burn. But then when we launched in April on a liquidity pool, all those transactions on the liquidity pool, that 2%, that usually other projects take that 2%, we just gave it back to the ecosystem. And that 2% just helped the ecosystem grow. And newly minted coins gave us that huge APY. We're not always going to have a 30% APY, but I'm thinking we're going to have around from 10 to 20, 25. It's going to vary depending on the ecosystem, depending on how many transactions people are doing, how many minting people are doing, how many staking people are doing. Just like any protocol, like depending on the use case of the protocol, that's going to represent the APY.
Right. Well, if I wasn't talking to you, I would definitely say 30% API is a red flag, because that's very high. And the last time that companies offered 30%, I think you know what happened. There was a massive crypto collapse and it was not sustainable. So that's like kind of the thing. I guess in a way I can understand, because you're actually using the Ethereum to back it. So that sort of, you have that liquidity option. But somebody might just say, well, okay, why don't I just speculate on the token price then? If I think Ethereum is going to go up, why don't I just sell all my Ethereum and just buy this token anyway? But you're saying there's more advantages because you can access the liquidity and borrow against it. So you actually, in theory, you could, let's say Ethereum doubles, you would like 4 to 5x.
Exactly.
If you were doing it this way. Yeah.
So here, I want to point out something very interesting that you talk about. is that why would users hold Validity instead of Ethereum? And it's great. I'm going to speak about that. But before I do that, I want to talk about the APY. So if you see in January, you see where it says in the bottom, it's 0.0093. This is showing the amount of Ethereum that each token has generated up to that point. So when the APY goes up, it's just showing you the percentage of that had gone up about the amount of Ethereum backing each coin or generating each coin. So if you see now in April, at the end of April, it's 0.0098. Now we're already at 0.001. So it keeps on generating more Ethereum. And the thing with those other protocols, which of course, terrible, and they're giving huge APYs, didn't know where they were coming from. Here, you can see exactly where they're coming from. They're coming from the 2% transaction fee, they're coming from the staking, and they're coming from the minting, right? And depending if that's a low month, right? Low people minted because the market went down. So people, instead of minting, they're just buying in the market. If there's not much trading, you'll see this go down as well. And if people start unstaking, right, instead of staking their Validity, they just want to hold it, you'll see it go down as well, right? So I just wanted to talk about that point. There's one thing that you spoke about, which is like, why would users, instead of holding Ethereum, they just hold Validity? And I think through time, and meanwhile, this project passes barriers, you'll see that a lot of the community will choose to do that. If you see at the beginning, when we launched our Ethereum network, the price point, the gold line is Validity and the gray one is Ethereum. You see the difference, that gap between the two price points, it's consistently growing. And it's consistently growing because each Validity is consistently generating more Ethereum. And you see that the price action is very similar, of course, because we're pegged by Validity. We have more volatiles because we have a just smaller market cap, much smaller community. So when people sell, we feel it much more, but it comes back, right? But at the end of the day, that gap is just going to get bigger and bigger and bigger because each Validity is just generating more and more and more Ethereum, right? So on the upside, we're more volatile to the upside. And on the downside, we also go down much less than Ethereum because it's consistently generating more and more Ethereum, right? So that's the basis. When we feel that when the community and the market sees that, they're like, wow, I'll just hold Validity instead of holding Ethereum because Validity is just generating more Ethereum. And the great thing about that is that you can access that Ethereum, right? You can access it directly. You don't have to leave it in the smart contract.
Sergio, right off the rip, I don't mean to cut you off, but Sergio, right off the rip, what is so let's say I put in 1 Ethereum, right? And I do the process, right? And I reverse stake it. Well, how much Ethereum am I able to pull approximately off of 1 Ethereum to actually have access to liquidity? What's that number?
So that depends where you got it in the market, right?
Okay.
So let's think about these 2 price points, right? So the bottom one is the amount of Ethereum that's generated each token, and the top one is the amount of Ethereum needed to mint. If the market is down and you got it here at the bottom, you buy it and you reverse stake it and you get literally 100% of it.
Okay.
Right? If you get it at the highest where it is right now, you get 50 because it's 2 times the price. So it's always depending where you got it in the market. So you either got 100% of Ethereum back, and that's great because if the market dumps in Validity and people buy in the market and go and reverse stake, they get 100% of the Ethereum back, but they still have 100% of the tokens being staked, generating more Ethereum, right? And they have access to the upside. But if the market is high and is at the minting price where we are right now, holders will just decide to mint, but you still get a big chunk, which
half
is
of it.
Yes. So it's either from 50 to 100%, depending where the market is.
Cool.
Yeah. And to clarify the Ethereum generation, I think that might be confusing if some people weren't following. That's not like coming out of thin. You're not just generating Ethereum. Like like, so it comes from so what are you saying? Like someone who's staking and paying fees and using whatever the app or whatever they're doing, you're saying that a portion of those gets distributed?
Everything. Yes. So for example,
But you're not like I'm saying, you're not creating Ethereum out of thin air. It's coming from somewhere. Like
the Ethereum that is coming from newly minted coins. So you see that Ethereum that we have right now. If you see the video when me and Keeper did it, was 1,180 something, and up to now is like 1,220. We've generated like 40 Ethereums, but that's users coming in, minting validity, giving their Ethereum and getting validity. That's where Ethereum comes from. And every single other transactions, right? When you go, you can see, I'm going to share my screen. I'm going to share my screen to another tablet so you guys can see something. Here, you see this tax fee, which is 2% to either to buy or to sell. In other projects, the founders of the team take that 2%. It goes back to them. This 2% goes back to the revenue cycle treasury, taking those coins out of circulation. So we're all benefiting from those 2%. Every time users buy and sell, that 2% is just generating more Ethereum for everyone, right? Because those validities are taken out of circulation. Those validities have been backed by Ethereum. The Ethereum stays, but the validity goes. And every time that users also stake, they have the same outcome with that 1%. The validity goes, but the Ethereum stays. So we're not generating Ethereum out of thin air. We're generating through minting, transaction fees, and staking.
I like this comment. Somebody had said, "Oh, it's I'm getting kind of confused," and then somebody tried to dumb it down even more. Minting is ETH generation. Fees are ETH distribution / earning. Right? That's a very simplistic way to put that out there. I like that. I like that a lot.
That's the simple way to do it. So that's how the ecosystem really works. We're trying to make it as simple as possible so users can and the community can understand. Right? It's an ecosystem where we just all benefit directly the same way through these three main functions. Right? And the great thing is that soon we're going to add other assets. Right? So the next asset to add is Bitcoin. So not only are you going to generate with the validity token, you're able to generate Ethereum, but you're also going to generate Bitcoin if you want, right? And then we're going to ask our community what you think is next, right? We have a lot of our community, our small community right now. We only have like 430 holders. They're pushing a lot for gold, for a backhold token, just in case the bull market ends and the bear market comes. That bag of gold helps us on the price down, right? It sustains our price a little bit more. And the great thing about this is that you can add this validity to any other asset. So you can do Bitcoin, XRP, Cardano, whatever the community would like to do, we can add it. And every time we add a new token, the price action reflects it, because to mint, let's say Bitcoin, you're gonna have to add wrapped Bitcoin because it's all in the Ethereum network. And that's going to make it push much faster. So right now we're in an accumulation stage where you're going to see the price stabilize for a couple months. When users come in, it's going to generate more Ethereum. As soon as we add Bitcoin, you'll see a good price action. Every time we add a new asset, you'll see another price action happening.
I have a quick question for you from the chat. They want to know, okay, it's a bear market. What happens when not it's a bear market now? They're just saying, hey, assume it's a bear market. Price is consistently going down.
Yes.
What's that scenario look like?
Okay, so if, let's say we're only staying with Ethereum, right? That's one of the reasons we're adding gold, right? Because we want to have that stable asset helping us on the way down. The price action won't be so affected negatively. But let's say we're not there. Let's say we just stick with Ethereum right now. We're going to go down because we are pegged to Ethereum. So the price action will reflect that, but you'll see that it's going to keep generating more Ethereum because the circumstances of transaction fees, staking, and minting don't go away, right? It's just at a less price point. So it is going to keep generating Ethereum for you, right? So you have a protocol that's going to keep generating Ethereum for you. It's going to be worth less because Ethereum is going down. But when Ethereum goes up, which we all believe that in the long run it will, then our ecosystem goes up. And that's something that Crypto Zombie spoke about, is that when Ethereum goes up, let's say whatever you speculate that it will go up, let's say a 2x, right? You multiply whatever you think we are going to do. So if Ethereum does 2x and you think this protocol will do a 2x, it means our token value did a 4x,
Right.
So it's great. So those people that want to have more exposure to Ethereum, it's a good way to do it.
Yeah. The thing that I like though about you guys that I saw you got the CerTic audit.
Yes.
And that's actually pretty comforting for a lot of people who don't know. CerTic is very legit. I actually met those guys years ago. They're probably one of the most legit auditing companies in the space. So you passed the audit. So they have looked at your smart contracts and they can verify that there's no way for there to be a rug or for there, there's no backdoor entrances. So that's good. So, I guess it's one of those things where like, if for some reason the experiment didn't work, it's not because the developers rugged anyone. It's just because for whatever reason people stopped using it or they all pulled the liquidity out or whatever. But the cool thing, I think, what I like about you guys is I'm a long-term cycle guy. Of course, I want to make my money in the bull run, of course, and you got to take profits at some point. But I always hold. Like, I'm never going to sell all my Bitcoin. That's never going to happen, or never going to sell all my Ethereum. I'm always going to hold a little bit of it or some of it, for the long run. So, I mean, if you're kind of looking at the whole like 1 ETH equals 1 ETH or 1 Bitcoin equals 1 Bitcoin, then yeah, it may not seem like particularly lucrative in a bear market. But if you're still able to utilize the protocol and you're able to generate more ETH in the process, even during the bear market, I mean, I'm not trying. I feel like now I'm selling it, but I mean, that's kind of like a set it and forget it mentality. Like if you're just going to hold your ETH anyway, and you're not going to sell it, and you're going to watch the price go down 50% or whatever over the course of a 2-year cycle, then why not just be generating more ETH in the background anyway? Come back when the bull runs back, and now what? You've doubled you double your bag, but
that's literally Zombie. That's literally what was like the real selling point for me was exactly that, because my ETH was just freaking sitting there, bro. It was just doing nothing. And when I got introduced to Sergio and this whole idea, it was, and I told Sergio this, I said, hey, I think the hardest thing here that to get people into the ecosystem is having a fundamental, like simplistic understanding of what's happening. So I think that has been, the hurdles, but at the end of the day, like, yeah, the ETH is sitting there. It ain't doing nothing for me. I'm not going to sell it anyway. If I can continue to generate more ETH, and community coming in obviously helps with that as well. Somebody in the chat earlier said, yeah, but what happens when the whole freaking market dumps? Well, you're screwed anyway, right? Like the reality
well, then
is
sell everything for stable coins. I don't know. Like, I mean, look, I've conveyed my strategy very much. I'll take profits at certain points, at certain key levels. There's certain numbers that I'm looking to take profits, but my profits are more just to secure my ability to be able to live. Like I want to have cash so that if I sense there's a bear market coming, but I'm not going to try to like swing trade the whole freaking top to bottom, because you never know. I mean, you could get something like 2013 where you have a 50% crash mid-market. Everybody says it's over, and then it does a freaking 4,000. You know what I mean? So I would want to hedge in multiple ways. So, I mean, yeah, for me, I just I like the idea of it. The only thing is, like for example, Sergio, does this, I don't want to use the term Ponzi because it's not a Ponzi and I'm sold on that. But does the success of this rely on more people continuing to stake? Because if let's say today everyone was like, I'm done, I've had enough, we're all unstaking. Then what happens?
Yes, I want to answer like 3 things. I'm going to answer this first, and I'm going to go back to a couple of things. I'm
just playing devil's advocate. I'm not trying to rag on you. I just feel like,
this is what I want. And if I don't convince you, call me out on the bullshit. But if I convince you,
well, no, I'm gonna try this either way. Like I'm a big boy. Like I don't care. Like I've taken risks. I'm gonna try this. Like I want to test it for myself. But
so the great thing about this is let's say everyone unstakes, right? For them to unstake this, right, these 11 million tokens, they have to give back the Ethereum they've claimed, right? So they give it back to the ecosystem, and the ecosystem, they're going to have 1,221 Ethereum. This 1,221 Ethereum is true locked value, because every time that users enter Ethereum here to generate more validity, this can only go out by staking. Right? So users, you can see 94% of it been staked. That's why 94% users have it. The rest 5% is in our smart contract. You can click it here. It will take you to our smart contract. You can read it. It's called the Yield Rate Treasury. Am I showing screen? Yes.
Yeah.
and you'll see the value that's there, right? So for users to unstake, all they do is they give back the Ethereum. So this is our true locked value. If users unstake 100% of this and sell it, and everyone sells and no one buys, and the project completely dies, the worth of the project will never go under this. The worth of the token will never go under this.
Because it can't.
Because
it's locked and it's there.
It's locked there. You can only access back your tokens by giving back the Ethereum. And you can only access the Ethereum by giving back the tokens. Right? Was I able to answer your question?
What's your background, man? Where did you come from originally? Because this is not like the way that normal crypto people think. This is some type of like traditional, like, I don't know, not traditional at all. Actually, you can't really do things like that. You're lucky if you get like 0.2% in your freaking CD, but hold it for 5 years for 5%, and then you don't outpace. Then inflation's 3%. So you just lost money, not as fast as everyone else.
Check this chat out. This is exactly how DeFi was supposed to be designed, and that couldn't be more true. I will say that. The reality is DeFi was supposed to be for the people, by the people, of the people, and effectively what Sergio just said by saying, okay, everybody on stakes, he didn't say, hey, it drops into my wallet and I walk away $3.7 million, wealthier. He said, hey, it's there, it's locked there, it can't go anywhere. Smart contract's been audited. You know what I'm saying? And so many of the projects have that backdoor, that backup plan, right? Like you burn all the boats, Sergio, right? Like I heard somebody talking about that the other day. Burn all your boats and you'll be successful. And I was like, what is this guy really saying? He's saying, hey, listen, there's no real backup plan for, whatever that scenario is. And it seems like that's what you have going on.
Yeah. And answering some stuff of what crypto was asking. The first thing that we did, the reason that Validity came to be is that I was a big stockholder, right? I holded a lot of stock, especially in aesthetics, right? I was able to get in early.
Zombie, this is a crazy story. Wait till you hear this. This is shitty and beautiful in the same time.
I got some stocks, right? Just a company that was generating a Botox replacement product. They were backed by one of the biggest clinics in the world. I was very excited, bought into it when it was around 50 cents. They started acquiring more companies, doing whatever. It blew up to $4.50. I was in paper multi-millionaire, and coming from Colombia and not being like that well off, I was very, very in the high. And then 2019 came in and everything crashed, and I wasn't able to act fast enough, and everything got below where I bought it. So I went from having very little to having a lot to having nothing, right? And that emotional hit, I was already getting into crypto, and I was thinking there has to be a way that doesn't matter what happens, doesn't matter another COVID, another war, or any disaster, the value of this asset cannot go down from a certain point. So that's where the idea came from, right? And it would be is that the only way to create this is that to add Ethereum, and that Ethereum backs the tokens. Instead of me taking that Ethereum from token sales or whatever, I just leave it there in a smart contract that backs the tokens. How do I do it even better? It's just like when the gold was back in the dollar. But how can I even do it even better? That every single transaction just generates more gold per dollar. So every single transaction here, from newly minted, from transaction fees, from staking, is just generating more Ethereum per thing. So that's where the idea came from. We wanted to do, I was a big HBAR fan at that time. I did great with HBAR. So we contacted HBAR after 2 years of getting the tokenomics right. We contacted them. We wanted to do it on the blockchain. They advised us to work with this company called Iterate, which is one of the best developing firms based out of California. We spoke with them and we decided to do it either on the Ethereum. It took us like 2 years to develop the whole protocol. Then we went to CoinMarketCap and we went to all the biggest assets or biggest tokens out there, right? Of course, Bitcoin, Ethereum, they don't have they don't have audits. But the next one, like USDT, it's audited by CertTech. XRB, audited by CertTech. Binance, audited by CertTech. Crypto.com, Polygon. The biggest boys were audited by CertTech. So we contacted CertTech, and it took us like another 2 years to get every audit, make sure that everything was clean as possible. So If you can see, this took 5 years and millions of dollars to build, to create a real product that is going to be here this bull run, the next bull run, and the next one. And when we start adding more assets, usually going to be like, this is beautiful. I hold one asset that's completely decentralized, completely transparent, consistently generating the other assets that I already love, which are Ethereum, Bitcoin, gold for safety, and then just add whatever the community wants. Right now, we're getting a lot of the community in Cardano since Crow fell in love with this project. Yeah. And at the beginning, he was a little bit wary, but now he's seeing it. And he's there, like
Crow loves Cardano. That guy.
He loves Cardano.
That's like you with Bitcoin, bro. The moment Sergio told you he was going to add Bitcoin, you got a little, something going on.
Yeah. I know. Now, I used to be the new guy on the block, and now I'm called the dinosaur because I talk about Bitcoin. I never thought the tables would flip. Like suddenly I'm the old guy in the space. Yeah. But like I was just going to say that was a reason why I don't really stake my Ethereum, because again, I don't know how to set up a node. It's super complicated.
Yes.
Someone in the comments might say it's easy, but it's not for me. And I would have to then trust it with some other third party. The majority of them are centralized, which I don't feel comfortable. So, obviously having a truly audited contract, because I do trust DeFi when it's done correctly, even though it can be scary. But if it's done properly, I would trust DeFi all day, every day over a bank, over a company.
Yeah.
You know what I mean? Like it's not like with the whole SPF thing. It's not like Bitcoin failed the people. It's not it's like a human being failed the people. The bad actor did the wrong thing.
And that's something that we're trying to really focus on. That Validity is completely autonomous. Validity is based on 3 smart contracts, and it cannot be changed only through governance, right? So if you go to our website, I'm going to share a screen again. Go to our website, you click up here, smart contracts. It gives you the 3 smart contracts that sustain the whole tokenomics. So what I recommend people to do is when you're going to use the ecosystem, go to the smart contracts and see where the transactions went. See what it did, right? So you can actually understand what the blockchain's meant for, right? And then we have our governance that changes everything else. But the point is that all of our smart contracts are there for people to see every single transaction. And going to the point that you said, it's very sad that a lot of people in the crypto space got rug pulled, got scammed, got whatever unfortunately happened because of a human, right? Because they don't understand what the blockchain is really meant for. The blockchain is completely to be autonomous, decentralized, and transparent. So that's what we try to do, make it as simple as possible, and that users can see every single transaction and they understand, okay, this makes sense. Each token is generating more Ethereum by minting, and every single transaction is burning more coins, generating more Ethereum per token.
Sergio, let me do a quick pause here. First of all, Crypto Fam, if you have not already, smash that like. Hate asking for it, but make sure to do it. Make sure to check out Validity. I've got their link down below. If you guys want to check it out, the link is right down below the video. And make sure to check out, obviously, Crypto Zombie donating his time today. So I appreciate him for doing that. But Crypto Fam, also, I want to show this before we leave. Sergio, can you show it in action, right? Can you show somebody how simple it is, what needs to happen, and what this looks like, and show Zombie, hey, okay, here's what it is, here's where you buy it, here's what happens when you do it, and here's how you reverse stake it?
Okay, perfect. I'm actually going to do it from my own personal wallet, so you guys can see the assets that I have, how much I've generated, and where I have, because, of course, I like to try to be as transparent as possible. So here, I'm going to share a screen.
Yeah, let me know.
You can go here to Validity, right?
All right, Sergio wants to flex a little bit. It's all right. I get it.
No. I just like being more transparent as possible, right?
Yeah.
So you go here to Validity, right? You go to the top right, you launch dapp, right? When you launch dapp, you can connect to the ecosystem either through MetaMask, Wallet Connect, or you can download our own non-custodial wallet just for a better experience. But it just works like that, right? So here you have the dashboard that'll show you the pools that you have and the Ethereum that you're generating, right? It gives you the market price right now in the market, and it gives you the amount of yield that has generated, right? One, I like showing my personal wallet so all the holders and users know how much I have, and they can also see how much ETH I've generated up to this point. Like I have generated 644 ETH without having to sell. So
which is crazy.
Well, I don't want to sell this. I never want to sell this. I'll just keep generating more. I will only sell if, for example, let's say we need to get a huge liquidity to go on Binance or on an exchange, or we need liquidity for X or Y reason, or we need more developing and auditing and cost a lot of money. Well, then I will sell at that point. But why would I sell something that's just consistently generated more Ethereum for me? Right.
And a big sell is going to put a bunch of money back into the same damn ecosystem that you're selling to get the liquidity to continue to grow the ecosystem anyway.
And remember, if I sell, it brings the price point closer to the yield rate. So users can come in right now. They mint, right? At 60 cents and get 30. If I sell, it's going to get closer to 30. So they're going to get a much bigger percentage. So if I sell right now and I sell the price to 40 cents, people buy it at 40 cents and reverse stake 30. They get 80% and then consistently generate for you. So when you connect to the ecosystem, you have two options. You either mint or reverse stake. Let's go to mint in the bottom. Here, it gives you the price point in the market, right? At what price point you can mint at. You can buy it in the market. Right now, it's trading in our liquidity pool. And it shows you how much, at what price point is to mint.
And you would just do that, just to be clear, Sergio. They would just go over to Uniswap to jump in and buy it.
So you go to Uniswap, right? You can go, let's say, go back to the website.
I didn't mean to cut you off. I just wanted, you said go on to the market. Some people were asking in the chat, like, where am I actually buying it?
So right now you can go, let's go back to Validity. You can click on Uniswap here, right? Or get V on Uniswap. It just gets you directly to our token. And you buy whatever you want to buy with ETH, USDT. You switch for it, right? You can get it. But right now, I don't recommend the community to do that because you can mint at a cheaper price than you buy, right? So right now in the market it's at 65 cents, but you can mint at 61, right? So it makes more sense to mint, right? So when you buy, you normally just go buy. You want to reverse stake, you come here to our ecosystem and reverse stake. But right now, you want access to it. The best thing is to mint. So you press here, mint, right? It gives you what you're doing. You're locking Ethereum into the year rate treasury, and the revenue cycle treasury is generating validity for you. You click mint, you put how much you want to mint. So like right now, let's mint $1,000, right? Let's mint a little bit more. Let's mint $5,000, right? And I'm going to mint it through my phone. Available, mint. You're going to see here, right now, I have around $4,000. I'm going to mint 5,000, right? And what I want you to see as well here is look at the yield available. What happens when I mint, right? So right now I'm minting through the phone, right? So I'm doing the same process. I'm just clicking here, mint, accepting it on the phone. It's minting, right?
It was at 3,000. It was at 3,013. Is that what we're looking at? Right.
Yes.
Okay.
And you're gonna see here, this pop up is gonna grow more because I just minted more, right? I minted $5,000 worth. So perfect, right? I minted it, right? And now I have more Ethereum because the amount of this validity is backed by this amount of Ethereum, right? And now that I minted, I made more yield. Everyone in the ecosystem right now just generated more yield because I minted, right? Now I can access that by reverse staking. So you can either click here and yield available, or you go to reverse staking and you can just open a reverse staking pool, right? Here it explains you what you're doing. You're locking your validity into the reverse staking treasury, and the yield rate treasury is giving you the Ethereum that's backing each coin. We've generated that coin at a time. Right now is giving you this amount of Ethereum for token. So you can open it, right? You can press max. You can claim this. I'm going to do it on my phone so you guys can see what happens. Are you following me, Zombie?
Yeah, man. I'm about to throw all my ETH into this right as soon as we get off. All of it. Done. No questions asked.
So you see here, I just confirmed it on my phone. You'll see what happens. We'll go to the dashboard, right? I'm going to claim this Ethereum, but I'm going to have a new pool. So you're going to see this amount, right? This 15 tokens will have worth in the market of 9,000. It's going to have now, let's still doing on the blockchain. I'm going to stake those tokens. So I still have access to them, right? But I'm getting $6,000, right? So I'm getting liquidity from these tokens without having to sell them. So I get liquidity, but I still hold the tokens. So if the tokens go up in the market, I can sell to them. I still have access to them. So this is something like to think about, okay, how can I have more exposure with less risk? You go, you mint, you buy, right? You see them, they're here, the 15,000 tokens that have worth in the value in the market, 9,000, but I claimed 4,630.
To go do whatever you want with it.
I can do whatever I want with it. It's back in my wallet. I can just generate, I can just take it out, right? Or I can go and mint more, right?
Yeah, gotcha.
So all depends really in the market, right? So if let's say the market it goes down, right? People start selling, and then it makes more sense to go get it in the market. You buy it in the market, and you come in reverse stake. If it goes down a lot, it's a great opportunity because it's closer to that yield rate, to the amount of Ethereum. So if it goes down, you're getting more and more percentage of your tokens, but you still have 100% of the validity.
And you're able to compound it, right? That's like
you're able to compound it. So for those users, you can use validity in different ways, right? So there's 3 ways, but of course there's an ecosystem. People can be savvy and use it either ways. But I give 3 examples. One, let's say you want to be very conservative. You purchase validity and you hold it and you reverse stake it. You already got 50% of it out, and you keep generating more Ethereum until it generates everything you put in, and you're out 100%, and you still have 100% of tokens, right?
Right.
The second way is the way to generate more Ethereum. How do you generate more Ethereum? You get your Ethereum, you buy more validity or you mint it, you reverse stake that Ethereum, and you turn that Ethereum into fiat. Now, if validity in Ethereum goes down, now you use that fiat to mint or buy more at a lower price. And you're just accumulating more Ethereum, right? And if it goes up, well, you're benefiting. The third way is to have most exposure to the protocol and to Ethereum itself with having a less investment, is that you buy validity, you reverse stake, you buy more, you reverse stake, you buy more, you reverse stake, you buy more. So with the same amount of capital, you just have way more exposure. That on the upside, you're just benefiting if you invested like $1,000, but you benefit like if you invested 10, right?
Right.
So those are the 3 ways, but users can use it at any protocols that they want. And when we start adding these other assets like Bitcoin, like gold, like Cardano, and all these prices fluctuate, now users are able to arbitrage between those different yield rates, generating more transactions, generating more profit for everyone. Right. But at the end of the day, it's just a simple way. It's complicated. It sounds too good to be true, but the math makes sense. It's been developed by one of the biggest companies, and it's been audited by the biggest company. And we're in the top 10% in security. I don't know if you saw our CertTech audit. We're in the top 10% of security of all the projects in the world, because our smart contracts are only 3. They're very simple, and they can't be hacked. Right. The only way to hack them is through Ethereum, right? To hacking Ethereum itself.
You have to hack the Ethereum blockchain.
Yes. So which is almost impossible. So you have this great protocol that everyone just benefits equally. Instead of a third party taking the fees, we just distribute
putting it back in. Hey, let me ask you this real quick, Sergio, before I know we're kind of coming to the end of the time here real quick, but I think this is very important. We all know in crypto, marketing is crazy important. I don't care what any project is, it's got to get exposure, right? So somebody's asking, what kind of marketing are you doing to gain more market share? Because we obviously getting in, new people coming in, they want to see this thing grow, because that does nothing but the more this ecosystem grows, the more the fees go in and ultimately are creating more ETH, which is going to give me more yield, blah, blah, blah. We want it to grow just like any crypto asset. So what kind of marketing are you doing?
So right now we have various marketing tools where we can have all of our socials, where you can go, and at every single month we give you the stats of last month. So we'll give you how much Ethereum we generated, how much the burning has generated, how many holders we have. Because I do come from public companies, right, and shares and stocks, I took that, right, to give just information to users just to see these are the stats, this is how we're doing every single month. So you can use that in all of our socials, right? Also, there's something that I'm doing that I really invite everyone that has any questions to do, that you can go to the bottom of our website. I'm going to share screen one more time to show you. You can go to the bottom of our website.
Oh yeah, I forgot about this.
And you can mint right now 2,500 V, and you're going to have that V that's going to help the ecosystem and whatever, but you're able to book a 1-hour call directly with me to ask any questions and concerns. because one of those things when I was going through that bear market, I didn't have access to all the CEOs seeing like, what's the game plan? What are we going to do to not lose all these millions of dollars? But here you have direct access to me to ask questions, concerns, or just give me your insight of what you think of the protocol, what we can do to grow. Other than that we're doing just these great open AMAs and talking to people that are great in the space like you two to just have you guys try to answer all the questions that you guys have.
Well, like I said, I mean, I'm not looking for a sponsorship or anything like that. I just want to use, that's why I hopped on. I want to try it. And, if it's good, if I like it, then I will share it. You know what I mean? With my community. I just wanted to get some more public. I wanted to basically document my questions, because sometimes I talk to a lot of people and I'll say on my channel, like, yeah, I met a guy in Dubai and I was talking to him around like a couple drinks or something. And, nobody sees that conversation. So I was like, I wanted to do this publicly, so this is how I would ask questions. And yeah, I mean, I think the best thing to do is just to kind of start using it. I would encourage people, maybe if you're still on the fence about it, try a little bit, put a little bit in, see how it performs, see if you're happy with the results, and then maybe if you feel more comfortable, increase your exposure. But like I said, for me, I have a lot of Bitcoin, and it's not that much, maybe like one or two. So there's for me, I keep my altcoin portfolio smaller, but like I do have a lot of ETH just sitting around, and I don't trust these centralized exchanges. So I mean, for me, this is something that I'm more than happy to give a try and see how it works. And yeah, I mean, as far as market,
you're gonna love it when Bitcoin comes.
Oh, I'm going to love that. Yeah, hell yeah. I would love to do that. Of course, you're going to do it wrapped, like you said.
It's going to be because it's on Ethereum network.
Yeah.
Because we don't want. There's a lot of people saying like, why aren't I using like layer ones or going to other ones? That opens the exposure of risk, right?
You don't want to use Solana? You don't want the network going down every 6 hours?
No. We need the most stable, the most secure. So we're going to have wrapped Bitcoin, and all these assets that we're going to put have to be into the Ethereum network.
Dude, honestly, I'm pretty sold. I actually got to get going in a minute. I just flew back really super late last night. So I've been going nonstop, but I had this planned. He asked me to come on this, and I took an hour out of the day. So, I mean, yeah, man, at this point, honestly, you seem like a really legit dude. The project seems you're very transparent, very honest. I'm not being paid to say any of this. Clearly, I just wanted to really have a discussion. So, I guess what I'll be doing is, I guess I'll start using it, and I'll let you guys know, and I'll share on my channel. If you guys are following me, I'll kind of do some updates. Maybe we'll start with a small amount. Yes. We'll track it for a week or two, see how it does, and congratulations on actually making something legitimately decentralized. That's not only in the founders, benefit. Yeah, benefit. Thank you for the word. I'm sorry, I didn't get a lot of sleep last night. I was like I said, I got home at like midnight. So if you guys don't mind, I don't know if you're ending. I gotta hop off soon.
That's fine. You can hop off. I will just close some things for the viewers to go. I always recommend, please understand the product, right? Anything that you guys are gonna invest to, you really have to understand it. I'm pretty sure that Zombie doesn't freak out when Bitcoin goes down, because he understands what the protocol is, right? So when you guys come in and understand what the validity is really about, look into the audits, look at the quality of the audits we have, look at the quality of developers we have, and look how decentralized it is and how it actually generates Ethereum, then jump on board, and you guys will hopefully benefit from the ecosystem. Yeah.
Crypto fam, I love you. I appreciate each and every one of you for being here. You could have been anywhere hanging out on a Friday, but you're here with Crypto Wars, hanging out with Zombie, hanging out with Sergio. Check out Validity. The link is down below my stream. Until next time, question everything, trust nothing except for your boy CryptoKeeper. Holla like it's hot. We'll see you soon.
See you guys. Thank you.